I think the US is happy to kind of for the reserve currency to be gold, and China's happy for it to be gold because they've both got lots of gold. And it's kind of neutral. And that one assumes, by the way, that the gold is in Fort Knox when we're making this argument. But even if the gold isn't in Fort Knox, there is a lot of gold in America in private and public hands. And similarly, there is a lot of gold in China in the state and in private hands and in corporate hands. So it almost doesn't matter who owns it. There's a lot of gold in both of those countries. But of course, the decline in the buying of US treasuries, somebody's got to buy US debt if America's to fund itself, because it's got these enormous trade deficits that even with all the tariffs don't seem to be coming down very much. And so a short-term fix can be the revaluation of America's gold. So let's say there's 8,000 tons in Fort Knox, and that's currently marked to market at 8,000 tons is 260 million ounces. And that's currently marked to market at $40, $42. If it marks it to market at $3,400 or $3,500, that's, $800 or $900 billion in US dollars that it's suddenly created out of nowhere. So that gets it through a year or two. The spending's so big it makes me laugh. But then by which point you're looking at the stablecoin market, which grows. It's currently only worth 250 billion, but half the stablecoins are currently held in treasuries. Half of stablecoins. And, some of the projections that market's going to be worth 5 trillion by the early 2030s. Maybe not, but it grows. The stablecoin market grows and recedes with Bitcoin. But if the stablecoin market grows to 4 or 5 trillion, that's 2 trillion of treasuries that are being bought that previously weren't being bought. And that kind of compensates for the lack of treasury buying by other central banks. So America's still got a market for its debt. And bizarrely, the dollar kind of becomes the international reserve in the crypto markets because everyone's familiar with the dollar. And so I think and Besant clearly understands that, and he's talked about it. And so that might be a direction that we're going in. And but that means that Bitcoin's going to become an incredibly important strategic asset as well. Now, we don't know how much Bitcoin China has, but we know there's a lot of Bitcoin in China because it was once the heart of Bitcoin mining. And again, whether in private or public hands, they made it illegal, I believe, at one point, but I don't believe anyone necessarily sold, or very few did. But we know that the American government has got just under 200,000 Bitcoins. But more to the point, we know that American corporations, Mr. Saylor and the others, have got extraordinary amounts. I think MicroStrategy had 650,000. Something stupid like that. And then we know that 15 to 20% of American citizens own Bitcoin. And so they have a huge holding as well. So again, if the reserve currency ends up being Bitcoin, well, that's kind of suits the US and it kind of suits China because it's neutral. And America's got a very pro-Bitcoin policy. And there is a lot of Bitcoin in the US, whether in state or corporate or private hands. So it kind of suits America too. So I think you'll almost see this battle between the US and between gold and Bitcoin. There'll be like this standoff, and that's a conflict that's going to be 5 years away or something like that. And governments might prefer gold because governments own lots of gold, and governments tend to be run by old fuddy-duddies who are gold bugs more than they are they're older people. But as we all get older, there'll be more people in their 50s and 60s in influential positions in government who get Bitcoin, people who are currently in their 30s and 40s. So, that sort of standoff is for further down the road. And I'd have to say that in the short term, I would probably think Bitcoin would win it on the grounds of practicality. And particularly if the gold isn't in Fort Knox, it suits America if it becomes Bitcoin, the global reserve currency, because America can go, oh, gold doesn't matter. Look, we got loads of Bitcoin. It's all about Bitcoin. But in any case, for now, all roads lead to gold and Bitcoin, and eventually it'll just be one of those two. But that's further down the road. And so, I know it's a physical asset and it doesn't appreciate as I think gold has actually beaten Bitcoin this year. Gold's up 25-30% and Bitcoin maybe not quite as much. But normally Bitcoin beats gold. But I'm an own both guy. And I think they both have an incredibly important strategic role to play in the world and in your portfolio. And on the other side of the coin, we know the dollar's going to get weaker, and we know the pound is going to get weaker, and almost certainly the euro is going to get weaker. And the euro plans for CBDCs are going nowhere because they've made them illegal in the American Genius Act. They just said, no, we're not doing CBDCs. So they've just totally undermined the Europeans' attempt to go for CBDCs. So, yeah, I think it's too big an ask to expect people who are familiar with their national currencies to just go, in 5 years' time, you're all going to be using Bitcoin and you're not going to be using euros or pounds. I just think they will. But the euros and the pounds and the dollars are all going to lose their purchasing power. They have to. It's inevitable. It's built into the fiat system. Debt-based fiat money has to lose its purchasing power because there's no restraint on the amount that gets created. The only possible way that it increases its purchasing power if there's some kind of deflationary collapse and nobody borrows any money anymore. But we all know what happens as soon as there's any kind of hint of deflation. The first thing you do is print. And so, 2008 was all about creating money, and COVID was all about creating money. And the next sign of panic, there'll be another money creation episode, and we don't know where it ends up. Does it end up in the financial sector as it did after 2008 in the housing market, or does it end up with inflation in ordinary folk as it did during COVID? Well, we don't know because we don't know what form the money printing is going to take yet. But you can be sure that gold and Bitcoin will both benefit. And so, yeah, own both. More and more people are going to own both as time goes by, getting their money out of the fiat system. And their first use is as store of wealth. And as medium of exchange, that comes later, if at all. And gold will never be a medium of exchange. It's not practical. A gold standard is just a payment system built on top of a store of value system. Gold's never really been a medium of exchange. That was always silver, copper, nickel, except for like big purchases like a horse or something, or a suit. People do use Bitcoin of exchange, and the Lightning wallet is incredibly practical. And I've managed to send a payment of 1 Satoshi the other day, which is just 1/20th of 1 cent. But it's not really, Bitcoin's not a medium of exchange status yet, although you can use it for that. I know it's not good karma, but I don't actually like spending my Bitcoins because I want to keep them. I'd rather spend my fiat, but I know it's sort of good karma to use Bitcoin to spread it about.
Yeah. I recognize that it's, and I'm one of the rare cases that already earns most of the income in Bitcoin because I work with Bitcoin companies and they all pay in Bitcoin. So I actually have to sell Bitcoin every month to cover fiat bills because not everyone accepts Bitcoin, which kind of it's a good place to be. But I do think this medium of exchange thing with Bitcoin will take longer than people think. Like there are people that, it goes for this will take very long. I think this is not something that will come fast. But you said something very interesting. First of all, I never thought about that connection that in America, a CBDC is kind of completely banned and completely shut out. And in Euro, they are kind of pushing it forwards. And I never thought about the America actually undermining the EU policy, which obviously it is because you need the consummation of Americans also. But I see the stable coins as kind of a CBDC of Americans. Like for me, a stable coin that is centrally organized is different from a CBDC, but how different is it really? So like for me, like CBDCs and stable coins is like, okay, it's a central coin that is centrally controlled and has not a central bank, but has some sort of organization behind them and is also digital. So I don't know, like for me, stable coins and CBDCs, there's not that much difference for me.
I would agree. There's a lot of crossover in the Venn diagram, and they still enable whoever the issuer is, well, like the US can export its monetary policy through stablecoins, and it can export its inflation and its debasement through stablecoins. And all the sort of tracking evils that we're scared of are possible through stablecoins. And I presume you can program stablecoins in the way that you can program CBDCs, and you can say you cannot use them for this purchase, or, you know, if you buy this kind of thing, then you get social rewards points and all that sort of thing. I presume that's all doable in stablecoins. I don't know, but I presume it is.
What do you think is actually, if we come to a world where Bitcoin is more used already as a means of exchange, maybe even down the line, and I'm talking very down the line as a store, as a unit of account, do you think there is still place for gold, and is there still place for like the physicality of it? Because like even me, I live right now on like 100% Bitcoin, but I still own some gold. Like for me, it's like something where I see it as an emergency thing. I see it like, okay, if things happen, like I want to have some sort of physicality, some sort of physical gold, even though it's a very small amount compared to what I have in Bitcoin. But it's kind of interesting for me to think about the role that gold will have if Bitcoin is huge and dominant in a world of medium of exchange and unit of account.
Just give me a second. I don't necessarily think that gold is just for emergencies, but the way to think about unit of account is, for me, as I already said, gold is the best unit of account because it is the constant. It is the most constant, eternal thing in the whole world. But we don't use it as a unit of account. We use whatever money we report to the tax authorities with as our unit of account. So I'm in the UK, I use the pound as my unit of account. And the US, they use the dollar, and on the continent, they use the euro. Now, the pound, the dollar, and the euro are rubbish unit of accounts because they're constantly losing their purchasing power. You know, the pound's lost 40% of its purchasing power just this decade, since 2020. It's a terrible unit of account because then over time you have to use inflation adjusted pounds, and nobody can quite agree what inflation is. So it's just stupid. But we use it because we report in pounds. And so what we use as our unit of account will be determined by whatever currency we have to report in.
How do you think actually this will influence? Because when we talk about stable coins, when we talk about this whole fiat system and Bitcoin and gold right now is still that's probably wrong to say, but it's still like it's not used as a means of exchange. Most people store their wealth in stocks. When I talk with people, like they have the stocks, they have the ETFs, they have all those things. They don't have Bitcoin, they don't have gold usually, at least the people that I'm familiar with. What changes when people are getting more used to sound money and getting more used to those sovereignty properties of gold and Bitcoin, and it gets more mainstream maybe even? What happens then to state, to governments, to even central banks? Or is it always just like a niche thing where this is, even though it's the best unit of account and the biggest constant in the world, but it has no real effect on the mainstream what they are using?
In a funny kind of way, if you just buy gold and put it in a vault somewhere, even though it's storing value for you, you know, it's storing energy you've expended at some earlier point in your life, and it's preserving that energy. It's dead money. Even though it's storing, it's dead money. It's not doing anything. Whereas if I buy an S&P tracker fund, for example, at least, I mean, I know everyone's shaving their little bit off the side, but at least some of that money gets invested in productive endeavor in the stock market. And I suppose by holding Bitcoin, you could argue that by holding Bitcoin and just leaving it in cold storage, you're doing nothing. You're doing what you do with gold. But you could argue that by holding Bitcoin, you're contributing to the network. You can make both arguments. But when you buy an S&P tracker fund, you're contributing to productive endeavor. And if the use of Bitcoin, if more and more people buy into the Michael Saylor argument, the stock market goes up by 15% a year, Bitcoin goes up by 25 or 30% a year, Bitcoin is a better store of value than the stock market. Use Bitcoin as your main store of value. Don't use the S&P tracker funds. Then that's going to draw capital out of the stock markets and out of productive endeavor and into Bitcoin. And so, yeah, that might. And a lot of people just, in the UK, the best way to get protection from currency debasement for many years, for 4 decades, was to own property, to own a house, because it benefited from the process of issuing debt. Newly created money gets created when mortgages are issued, and that all goes into the housing money. And so you benefit from money supply growth by owning a house. That's all changed now because houses are so heavily taxed. They're no longer a good vehicle of protection, but they were. Now, so that's how the UK used its housing market, ordinary people in the UK, to protect themselves. They didn't realize they were doing that. They just thought they were investing in a rising asset. They didn't realize, in fact, all they were doing was shielding themselves from currency debasement. Now, the same thing happens in America. Like the stock market in America is to what the housing market is to the UK. And ordinary Americans just put their investments, their savings for money. Some of them put it in bonds and treasuries, but a lot of them just put it in the S&P. And we've seen the huge rise of all the ETFs and so on, which are just vehicles by which they're as much storage of wealth as it is growth. And so it's quite important to America that capital doesn't get sucked away from that.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.